Hey everybody, it's Bob with Trade Genius. Got my good friend Phil here. We're going to give you a Bitcoin update. So everybody is hanging on for the halving for the next rocket ride. What if we tell you that may not be the case? Stay tuned.
Trade Genius.
Hey guys, I'm gonna tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening.
Okay, Phil. So what's it going to be? Macro or halving? Take it away.
Yeah, so Bitcoin price action has revolved around the halving really cleanly in the last couple of cycles, right? I think you can look at the last three peaks and see that. And one problem with that would be just we have a really small sample size. The other is, what really is the relationship with Bitcoin and the macro? Or is it just all about the halving and that mechanism where we cut the production in half for the next 4 years? And, that's really the clean driver of price after the halving. So what I wanted to do is show everybody what it looks like at the halving, around the halving, post halving, and then also show you guys a way that we can look at how that relates to what goes on in the macro environment, macroeconomic environment. And I found a proxy that I think encapsulates all the different things that goes on in macro. So without further ado, let's just dive into the charts here and take a look at what we're talking about. So this is the halving chart here that we have up, guys. And as you can see, the red line, the red vertical lines there are the halvings. And what I did here is I simply just went and pointed out where you have a period of time prior to the halving where price tends to make a bottom, and then we make that ramp into the halving. And then we have a period of time post halving where price tends to ramp up and peak out. So a lot of times you will get a situation where if your bottom is a certain amount of time, the peak will happen the same amount of time after the halving. So in other words, if you look at the 2012 halving, we bottomed 50 weeks prior to the halving, and then the peak of it was not quite 50 weeks, but it was close, and it peaked out. So that's kind of where you look for a target for the peak on these cycle moves. In the 2016 halving, we bottomed about 72 weeks prior. And then again, we had a 72-week period after, and we bottomed or topped out about a month after that as well. In our most recent halving, 2020, we bottomed about 74 weeks prior, and then we topped out right around that 74-week mark on the backside of it. So similar situation here. We've got a bottom very close to about 74 weeks out, and if the same pattern happens, then we're looking for a top. Who knows where the top is? I think it's going to be six figures. We'll have to monitor the situation as we progress through, but that would imply, Bob, that we are looking at a peak somewhere toward the end of September in 2025, right? So that's what's going on if it's just strictly the halving driving things. Now, more immediate, we would probably expect a pullback down, one more dip down, and that would coincide with filling that 20K gap on the CME futures, which those tend to fill. So if that's the case, we do get a pullback with some of this weakness we're projecting for Q4. Then if nothing else matters, that should be the bottom pullback, and we should not break that level, and we should continue with our typical halving bull run and go off into the post-halving spike. All right, so that's the halving. Now, what happens if, though, we're just being really driven by macroeconomic macro factors that have been lining up with the halving? So here's what that looks like. And as a proxy for all the different things, credit markets, what's going on in as far as liquidity, I think a good proxy for that is the 10-year yield. And you'll notice if you take those halving dates, right, those vertical lines, and you transpose them down, I got the 10-year yield here toward the bottom. you'll notice that they kind of line up with a bottom in the yields. So the yield cycles have been lining up with Bitcoin halving cycles. Now, whether or not that was the intent with the creation of Bitcoin to have the halvings kind of line up with these macro cycles, I don't know. I don't think anybody knows for sure, but it is the case so far. So what's interesting about our situation here is that unlike previous halvings, we don't have yields that have come down. In fact, we've got yields that are rising, which means that the bonds are being sold. And we've gone over this a few times with you guys for the reason why the bonds are being sold off, a bit of a front running into the big issuance that's coming in the next month or next 2 months from Yellen on the longer dated stuff. So that affects the 10-year. So what we may see is if we see this pattern now again of where the yields need to roll over, then this might create this halving coming up. This might be a halving that is not like the others because we have not seen yields yet roll over and make this typical low. And that's been for a number of bigger reasons, right? We've had the COVID liquidity that you guys have seen numerous times on the channel. We've seen the big spike in that. And I think ultimately what we're going to see, especially if we're going to go into a recession, which is another thing that none of these Bitcoin cycles have seen, then we will see, I think, a different shaped Bitcoin cycle this go around. So I think we have a pretty clear picture of what will happen, and we're going to get an answer on what drives this. You know, it could just be that the halvings really do drive it, and then we're going to finally see a big break from these macro cycles. If not, though, then we may see more of an L-shaped type halving structure that we have not gotten in the previous years. And this bottom trough actually would extend well into 2024. And then we'd have to watch for a bottom in the yields, meaning that the bond market ends up topping out. And the reason why I think that might be the case is just because we look like we're going into a recession. When you do go into a recession, bonds take off, the price of bonds take off, which means the yields come down, and then the equity markets risk on assets will drop. And so if that's the case, then we're going to see exactly what I just talked about, this elongated halving cycle trough, and we won't see we'll see a bull run, but it'll come very late in the cycle. And I think it's going to throw off these nice clean halving cycles, and it's going to make this one skewed way to the right, and it'll have a late lift off. So that's something that we need to keep an eye on. And like I said, I think if we pull back to 20K, if it's all about the halving, that 20K holds. If it's not all about the halving and it really comes down to the macro cycle rolling over into recession, then I think that 20K level doesn't hold, and we actually may probe down to the cycle lows at 15K, Bob. So that's what I wanted to put out there as an idea that, you know, it may not be the same thing this time around. Small sample size, right, on these last 3 cycle peaks that we've had and troughs. So we're gonna find out here pretty quick. We're probably gonna know for sure, I would say, by Q1, end of Q1 going into Q2 of next year, Bob.
Yeah, I mean, look, Bitcoin has not been tested through a cycle, so this is going to be, really interesting. And for people who are just fanboys out there of Bitcoin and nothing can ever go wrong, you guys need for this thing to go through a cycle because you have to really understand what it's really serving against. We haven't seen it. We haven't tested it through a QE cycle yet. We haven't tested it through a bond cycle yet. We haven't tested it through an economic cycle yet or a tech cycle yet either. So it's going to be really fascinating to see. For us, we don't care. We'll call out the trades either way. And if you're in the crypto miners, Bitcoin leads those and they're leveraged the other way. So if Bitcoin goes down 10%, you're going to see the price of stocks like Mara go down 50 to 60%, guys. So just bear that in mind. You could be mad at us if that happens, but we warned you here ahead of time, and then you're going to get a great opportunity to buy assets really cheap. And Phil, what's really ironic to me is that I see that either macro or halving, the second half of 2025, I think it's going to be a boom year for all assets, because I think that's when everybody and their brother is just going to throw money at the problem again, because they're going to be sick and tired of being in a 18-month recession here.
Completely agree. Guys, let us know your thoughts down below. I know this is a little bit different than what we've talked about in the past, but I think it's worth considering given the fact that, like Bob said, we really have not gone through a macro cycle like a recession with Bitcoin. So let us know your thoughts below. As always, please hit like and subscribe. Check out our specials over at tradegenius.co, and we'll see you on the next video. Take care.
Trade Genius.